Good morning from our global headquarters in New York. I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your day. Decision day. The Fed is expected to enter wait-and-see mode, stuck between higher inflation expectations and growth fears. A banking squeeze. Citi slashes payouts for special bonuses. Morgan Stanley plans to cut 2,000 jobs. And no deal in Ukraine. President Putin refuses the 30-day ceasefire demanded by the Trump administration. Well, it's Fed decision day, and stocks are struggling to hold on to any sort of a bid this morning. Even with NVIDIA's AI Super Bowl, that not doing enough to save us. By the way, here's a sign of the times. If you bought the DAX or the Mag 7 at the start of 2024, you'd have exactly the same returns for both at this point. The Mag 7 has undone all of its relative advance for the last year. Bonds, treasuries benefited from that risk-off tone. We are moving slightly higher for your 2-year and 10-year yields, but let's call it basically unchanged. We had a 20-year bond auction yesterday that had a strong demand. It is clear that money is flowing out of stocks and into treasuries. By the way, a quick check on the lira this morning. It is getting hammered. It has extended its declines at one point beyond 10% to the weakest level on record. It's weaker by about 6.7% versus the dollar this morning. Turkish authorities detaining Erdogan's top prominent rival. That currency tends to react very acutely to any sort of domestic issues. Okay, some individual stocks that we are keeping an eye on. Citi this morning. Shares of the bank just higher by about 0.5%. It's cutting payout to hundreds of top executives in the final round of what is a 3-year special bonus program. The payouts were designed to tie top managers' compensation to see groups progress on improving risk and controls. Meanwhile, let's get a check on NVIDIA. Those shares not doing a whole lot of anything, considering that we had Jensen Huang's AI keynote speech. It was met with indifference from investors. It was called the AI Super Bowl, but it didn't do enough. He even unveiled new chips in AI computing cost concerns. He addressed those. Finally, shares of Tesla, those are rebounding this morning, 2.5% in your pre-market trade. Chinese rival BYD unveiled an electric car that can be charged just as quickly as a gas vehicle is refueled. The company stock is currently the worst performing on the S&P 500 index so far this year. Coming up in the show, we're going to be speaking to Jane Foley of Rabobank, and later in the hour, Citi's Andrew Hollenhorst. And as you saw earlier, we will be catching up with the Ukraine deputy head of President Zelensky's office for the latest reaction on what Russia and Putin said to Trump on that call. Now, when it comes to currencies, the Bloomberg dollar index down more than 3% so far this year, as many people called for this to be the year of dollar strength. Rabobank's Jane Foley weighing in, writing, in view of the extent of the U.S. dollar selling this year, we see scope for pullbacks on a 1 to 3 month view. That said, on a 12-month view, we see scope for the euro, the yen, the krona, and the pound all to make further gains versus the U.S. dollar. I'm pleased to say that Jane joins us now. She's head of FX strategy at Rabobank. Jane, let's break down those two time horizons. Let's start with the shorter one. Why is there an ability for the dollar to fight back against some of the losses in the shorter term?
Well, excuse me, we've already seen a little bit of that this week. For instance, look at dollar yen, it's certainly off its low. So a little bit of pullbacks because the moves has just been, really very extensive. But, the dollar is clearly on the back foot. We can see that not reflected in a number of other assets. So, for instance, you were talking about, US stocks. Look at those. And yet, in comparison, look at the numerous record highs we've seen from Germany's DAX index this year, or from, the Hong Kong stock market as well. There is a clear asset allocation going on away from risky assets in the US, linked, of course, to growth concerns. And of course, that brings us to the focus of the Fed tonight. Will the Fed be concerned about growth? Or, which I think is probably more likely, will the Fed be constrained by the fact that inflation expectations have moved higher in the US? That will limit the ability of the Federal Reserve to cut interest rates aggressively this year.
How much impact does that have on the dollar, Jane, when it looks like there are central banks around the world that are constrained? We saw that from the BOJ today. Despite data that might show that they could have done something that looked like a hike, they cited trade as one of their reasons for standing pat. Are we in a do-nothing central bank scenario for the globe right now?
Well, certainly, I mean, for the Bank of Japan, of course, the issues are the other way around. They're welcoming a little bit of inflation and they're standalone. And that point of view, the market is pretty confident that they will be hiking interest rates again. It's probably July, but could it be June? And again, if they are hit, if their auto sector is hit by tariffs come, say, April, well, clearly that gives them room for pause. But certainly there is a room for a breather. I mean, look at Norway. They may not even be able to cut interest rates once this cycle because of inflation fears. Sweden, their interest rate cycle could be over. We'll hear more of that when they have their next meeting tomorrow. The Bank of England, clearly constrained by the pace of interest rate cuts because of sticky inflation, and the ECB inflation or stickiness coming back there too. So I think you're right. Inflation or inflation concerns are a constraint, but I think that the central bank that this could really be a real issue for is the Fed. I mean, look at those inflation expectations in the surveys that we're beginning to come through. The Michigan survey, for instance, that is something that's going to be potentially problematic for the Fed at a time when the market's priced in 3 more interest rate cuts. You have to ask, can they really cut interest rates 3 times when inflation expectations are as elevated as they are? And I think this is something that the market really has to get to grips with, possibly in the next 24 hours, but certainly in the next few weeks.
So what wins out for the dollar then, Jane? Is it a Fed that's unable to cut as much, which would seem to suggest that there could be some strength to come for the dollar? Or is it the global flow of money that's going to Europe, with Europe spending more? What wins out in terms of the driver of the dollar going forward?
Well, I think if the market does, take that, if the takeaway from the FOMC this week is that, they're going to struggle to cut 3 times, well, the dollar could certainly see a little bit of support, some pullbacks. But I think if we look at the medium-term picture, we are seeing this asset relocation. We've had some, really exceptional news from both Europe and from China this year. I mean, we had the DeepSeek earlier on in the year, and then, yesterday's news that you just mentioned about BYD potentially having a battery system that could charge a car, in 5 minutes. Again, that's potentially game changing as well. And at the same time, of course, the fiscal response from Germany, this month, that's been huge, game changing news as well. So these are reasons that asset allocation is being tested, is being reconsidered. But I think in the near term, a more hawkish Fed could give the dollar a little bit of a short term boost.
So given what you're laying out and real changes to how stimulus is looking in Europe, in China, in the flow of technology, Jane, is the dollar's haven status, is it under threat right now?
I don't think that it is under threat as a haven right now. I mean, to me, the reason that the US dollar is a safe haven is because, 50% of the world's trade invoices are written in US dollars. And when there is a times of crisis, well, people just need to get hold of their dollars in order just to pay their invoices. So simple as that. So I think that is something that's a much longer term picture as we talk about de-dollarization. That's a 10, 20, 30 year horizon picture as to whether or not the dollar's safe haven status will be tested. But certainly, I think the fundamentals for the dollar have shifted, pretty significantly in the first quarter of this year. And I think it's an asset allocation or real asset allocation question that's really been on the minds of investors this year.
Well, Jane, I know earlier in the month you and the team revised up your euro call and looking at some of the different drivers of the euro, from Germany, from spending for the potential to an end to the Ukraine war, which we saw some hiccups in yesterday. What is and what isn't priced in?
Well, I think this morning we saw a little bit of a flurry on the Turkish news. Now that, again, is a potentially another sticking point because, say, for instance, we know in Europe that the US administration, can't backstop European defense indefinitely. We've heard that question. We've heard concerns about the structure of NATO going forward. Turkey, of course, is the second largest army within NATO. Turkey trying to position itself as being a little bit more fundamental in terms of European defence, potentially in return for EU membership. And now, we have Erdogan perhaps reinforcing his autocratic dialogue. So from that point of view, that adds more uncertainty into Europe's defence picture, into the European political backdrop. And that's another consideration and something which did create a little bit of wavering in risk appetite this morning.
Certainly. Lira weaker by about 6.5% versus the dollar. Jane, always a pleasure to catch up with you. Jane Foley of Rabobank. Thanks for joining us. Let's get you some other top stories now that are trending on the terminal. Let's dive deeper into that Turkey story. The lira is the weakest on record after the Istanbul mayor was detained. It's a move that could bar him from challenging President Erdogan in the next presidential election. He is among more than 100 individuals detained in an investigation into alleged fraud, bribery, and running a criminal organization. Cathie Wood's ARK Investment Management is cutting its stake in Meta Platforms for the first time in about a year. Her sale underscores the pressures faced by the Mag 7 tech stocks. Wood has been widely known for her aggressive bets on disruptive technology. Speaking of tech, Tencent is proposing to increase its annual dividend by 32% and intends to repurchase at least $10.3 billion worth of shares. The company posted its fastest pace of revenue growth in more than a year, driven by gaming hits and overcoming an economic downturn. Coming up, Putin refuses Trump's ceasefire proposal. We'll speak to the deputy head of the office of the Ukrainian president to get the view from Kyiv. That's next on your Bloomberg Brief. It's your Bloomberg Brief. I'm Danny Berger in New York. President Putin has rejected President Trump's call for a 30-day ceasefire in Ukraine. The Russian president only agreed to limit attacks on energy infrastructure while demanding a stop to the flow of weapons and intelligence to Kyiv. Still, President Trump called the talks a win.
I think we had a great call. It lasted almost 2 hours. Talked about a lot of things, and toward getting it to peace. We didn't talk about aid, actually. We didn't talk about aid at all. We talked about a lot of things, but aid was never discussed.
Let's head over to Brussels now, where Bloomberg's Oliver Crook is joined by a guest. Oliver.
Yeah, Danny, thank you so much. It's been a very sort of eventful 24 hours. We've just had that call between President Trump and President Putin to really discuss in many ways the fate of this conflict within Ukraine. And so we're very pleased to be joined by Ihor Brusylo, who is the deputy head of President Zelensky's office, joining us from Kyiv this morning. Thank you so much for your time, Mr. Brusylo. I'd like to just get your reaction to what we've seen over the last 24 hours. We've had that conversation between President Trump and President Putin. He failed to get Putin on board for that ceasefire that he has been lobbying for and that the Ukrainians have now been lobbying for. Do you think that this sort of semi-ceasefire on energy infrastructure, does this constitute progress?
Thank you, Oliver, for having me again here with you. What I can say is that the most important thing is that this conversation has taken place, and we appreciate the personal engagement of President Trump in the process. That's very important. At the same time, we should not be deceived by the strong and complicated word combinations that Russians usually use as their tactics in the negotiations, trying to drag out the process and to delay the possible developments that they may make use of. It's important, to see deep into the substance of what's going on, and not, as they usually say, we are trying to do everything so that other partners cannot see the wood for the trees. This is the usual tactics that Russian resort to. And the main thing is to keep focused on actually every word and deeds, as they may put it and say it, because usually they use this, word combinations like we have agreed to joint work to develop the comprehensive plans for the ways of settling the situation, which will be of stable, lasting, and peaceful nature. All this is just to hide the actions that they may take, and the good confirmation that after the phone talk, 12 regions of Ukraine were attacked by drones during the night with destructions and losses on the Ukrainian territories. This is still on.
And so we got readouts from the Kremlin and the White House, and obviously there were some differences in what each of the leaders were sort of presenting. In order to get through those differences, have you and your team, has Zelensky been briefed on by the United States after that call?
I believe this will be still during the day of today, and you will hear news by the end of the day. I'm hopeful about that. At least it's not off the schedule of the leaders. So let's wait what will come after every party talk to each other.
And I'd like to get an idea from you in terms of what you consider the next steps to be after this call has taken place and this sort of partial ceasefire has been put into place. Will there be another meeting between President Zelensky and President Trump? Will there be meetings in Saudi Arabia over the next few weeks?
What I can assume and say that the teams are supposed to meet in the nearest future, and it will be important for our side that the teams can meet first Ukrainians and the American team because as Jeddah proved, they developed quite a trustful and constructive dialogue based on good words and facts. Our team, chaired by our chief of staff, present the situation as it is without delay, without procrastination, and they are poised and determined to do so in the nearest future. So Ukraine is available and open for the mode of silence, as was declared by President Zelensky, everywhere, in the air, at sea, and on the land. And it doesn't have to cover only the energy infrastructure, as was proposed by the Russian side. We are absolutely open for this truce to take place. And that's how we are going to move forward and present this position to our European partners, and first of all, the American partners, because there is the trust built between them.
And I was reading the White House readout. It seemed that about half of the readout was focused on the war in Ukraine and sort of steps to try to end it. But the other half seemed to be focused on possible economic cooperation between the Russians and the United States, geopolitical cooperation between the U.S. and Russia. And there's also been these discussions that we've heard from Donald Trump talking about dividing basically Ukrainian assets already between whether it's power plants and territory. Are those parts of conversations that you're already a part of? How concerned are you about hearing those sorts of things?
Again, it's very important not to lose the focus on the main thing. We are talking about the stop to the hostilities and the end of war. After that, every proposal will be on the table. It will be a new period for Ukraine when reconstruction will start and the prosperity will be brought back to the country. But this is the second stage. The main stage is just to get the agreement on stop the hostilities, stop the killing, stop the destructions. That's in the focus of the president of Ukraine for today.
And I'd like to have your understanding of sort of what the Europeans' role can be in this conversation. Obviously, they've been sort of out of these discussions between Putin and Trump. This is a sort of bilateral, seems to be, sort of discussion. What do you imagine? What do you imagine the Europeans can bring to the table to help strengthen Ukraine's position? And EU leaders are going to meet here in Brussels over the next couple of days. What is your message to them?
Well, for Europe, it's very important just to keep up, to step up their security and defense capabilities. And there is no need to be deceived that once there is the ceasefire or the mode of silence in Ukraine, that it may not restart again. It's well understood by our Nordic European partners, and they will dedicate the bigger sums of money for the defense capabilities, and they will also dedicate some bigger sums of money into the investments into Ukrainian defense capabilities, because this will be the better security guarantees as of today. You need to have this defense to prevent the recurrence of this war. This is the main thing. And I believe they will regroup their strategy of defense for the nearest time. And it will be the main political point for every leader in Europe to secure that their citizens feel safe and secure. This is the top priority for everyone on this territory.
And I would just like to touch finally on, because we've heard, Putin's list of demands. I'll list some of them. He wants the demilitarization of Ukraine. He wants no NATO membership. He wants to give up basically the regions of Luhansk, Donetsk, Zaporizhia, Kherson, no European forces within Ukraine. Have you had any reassurance from the U.S. side that they will basically not cave into these demands, that they will stand strong against these?
This is absolutely necessary and important for us to keep the Americans on board, in meaning that they cannot just lose the global leadership position like so, and they will not succumb to these demands by the Russian that try to equalize and to be equal partner of the United States, as their readout of the conversation with President Trump shows. It's quite a dangerous game to say. It's not like you don't need to repetition of this catch-22 that was well described by Joseph Heller in his novel. So the main thing is not to be deceived by this complicated verbal combination that Russians use every time when they hold negotiations.
Well, Ihor Brusylo, thank you so much for your time this morning from Kyiv. That is the deputy head of President Zelensky's office, joining us there in the sort of very consequential last 24 hours for the discussions between Donald Trump, Vladimir Putin, and then the sort of briefing that we'll get hopefully for the Ukrainians over the next coming day.
Yeah, a quickly changing situation. Oliver, thank you so much for bringing us that interview. Again, that's Bloomberg's Oliver Crook with an interview with the Ukrainian deputy head of the office of the president. You're watching Bloomberg TV. Welcome back to Bloomberg Brief. Let's take a look at some of the front pages around the world. First up on the Wall Street Journal, the Trump administration has dismissed 2 Democratic commissioners on the FTC. Now, they claim that the removal is illegal, with both considering legal options, including a lawsuit. That legal fight could have consequences for Trump's authorities over other agencies, including the Federal Reserve. Next up on the Bloomberg, Morgan Stanley is planning to cut about 2,000 employees later this month. Sources say the cuts will take place across the firm, with the exception of its roughly 15,000 financial advisors. It's aimed at keeping a lid on costs, with executives grappling with minimal attrition in their ranks. And finally, we have to end with this. The Wall Street Journal leading with the astronauts safely returning to Earth. Butch Wilmore and Suni Williams went back to Earth safely aboard the SpaceX Dragon capsule. It splashed down at 5:57 p.m. Eastern after 2 NASA veterans spent 286 days in space. By the way, if you saw the images, there were dolphins beautifully swimming around the capsule. What a wonderful image to see. All right, coming up, we get back to the Fed. This is Bloomberg. From our global headquarters in New York City, welcome to Bloomberg Brief. I'm Danny Berger. Let's set your agenda. It's decision day. The Fed expected to enter wait-and-see mode, stuck between inflation expectations and growth fears. A banking squeeze. Citi slashes payouts for special bonuses, while Morgan Stanley plans to cut 2,000 jobs. And no deal in Ukraine. President Putin refuses the 30-day ceasefire demanded by the Trump administration. It's FOMC decision day, and stocks attempting to rebound after a fall that was led by tech yesterday. Even with NVIDIA's AI Super Bowl, that didn't do anything to assuage fears. By the way, here's your fun fact of the day. If you had bought the DAX and the Mag 7 at the start of 2024, you would have nearly exactly the same returns at this point. The DAX has caught up and the Mag 7 has caught down. The good news is as that has happened, bonds have indeed done what they're supposed to do. There was demand for them yesterday. We're a little changed this morning as we wait for a Fed decision later this afternoon. 4.28 is where you stand on your 10-year yield. We had a solid 20-year auction yesterday, too. A quick check on the lira this morning. The dollar overall is strengthening, and maybe this is part of why. That a haven bid does come in when you have things like this, where Turkish authorities detain Erdogan's most prominent rival. That sent the weaker, at one point weaker by 10%. It's now weaker by 5.7. So we do have a Fed decision on deck. Andrew Hollenhorst of Citi looking ahead to that decision, writing, quote, "We think risks skew dovish at this week's meeting. Survey data suggests that firms and consumers are poised to pull back on spending. And even before any changes in policy, economic growth appears to have slowed early this year." I'm pleased to say that Andrew joins us now. Andrew, I'm curious about this because when Powell last spoke before the Fed blackout period, he had said that the economy was on solid footing. How big of a shift or little of a shift in his language are you expecting?
I think it's going to be a subtle shift, but I think they do need to start making that shift, and I think Powell will start it at this meeting. The data that have come in, and remember, this is data really before we had any policy changes. Weaker consumer spending. In January, consumer spending was actually down. February, we saw the retail sales number earlier this week, and yeah, you got a little bit of a bounce back, but not that impressive of a bounce back. So it does look like the consumer has slowed, and that's huge for this economy because this is an economy that's been supported by the consumer.
At the same time, though, this is a Fed that we know has been reactive to survey data like University of Michigan, which has had inflation expectations move much higher. So can they really skew a little bit dovish, even just a tad, when you do have those factors coming in?
It's really not where you want to be as a central bank. They're going to be revising down their growth forecasts. They're going to be revising up their inflation forecast, to your point. And yeah, those inflation expectations, that's critical because they are thinking about scenarios now where they will need to be cutting interest rates even before core inflation has returned to the 2% target. you can do that a lot more comfortably if inflation expectations are anchored. Now, University of Michigan is one of many, many choices for inflation expectations that you can look at. I think they're going to focus on some of the other measures. New York Fed survey has been a lot more stable. If you look at the market-based expectations, those have been more stable. But the hawks, they will be pointing to that University of Michigan number.
It's interesting. Nick Timmeros writing in the Journal that the change that they see coming is this idea that the window to cut because of good news is over. Do you expect Powell's language to reflect that idea as well?
Yeah, I think that we'll still have the idea that inflation is going to converge towards 2%, but with this overlay now that, well, it would have been at 2% if not for tariffs. And that's where it gets really tricky for Powell, because we've heard Powell not want to speculate a lot about coming policy. On the other hand, we have tariffs that are going to be announced April 2nd. So we're getting to the point where that does need to be acknowledged.
But if they acknowledge it, but they do nothing. Is doing nothing in a sense hawkish, though? Because they're letting policy remain as tight as it is, even when you have that growth coming in. They can maybe guide a little bit more dovish, but is a do-nothing Fed more of a hawkish Fed at this point?
It's less important what they do with policy rates at this meeting. It's widely expected they're not going to move them, so that's not really going to move the market. The question is, in the dot plot, do we see the dots that are drifting a little bit lower? I think we'll see some of that, maybe not a lot of that, but some of that. And then in Powell's rhetoric, this balance between inflation and growth, and that's why I think he needs to start acknowledging this downside risk towards growth. Otherwise, it could end up being read as a hawkish meeting, and I don't think that's how they want to come out of this.
Neil Dutta at Renmac laid it out. Basically, he has to do nothing. And part of it was about the politics. This idea that if he skews more dovish, markets could rally. And then it's seen as an endorsement of Trump policy and he can go further. And then if he skews hawkish, it's seen as him condemning Trump policy. Are they stuck when it comes to the politics? Do you think that that is a fair balance that's playing on their mind?
I think they can really tie themselves in knots if they start thinking about how they respond to the policy and then does that influence future policy. I think what they have to do is just look at the data, and it is a difficult slate of data with stronger inflation, slower growth, but that doesn't need to paralyze them. And I think Governor Waller has made that point that just because there's a lot of uncertainty doesn't mean you do nothing.
Can we just go over just how weak you think things are right now? Because the sentiment measures have been weak. Companies have started to talk about, to your point, as we pointed out in the beginning, started to talk about uncertainty and a slowdown. It hasn't showed up in the hard data yet. Is that just because it hasn't showed up, it's operating with a lag, and it's coming?
I think there is some weakness that's coming. We're already seeing some weakness. Consumer spending running about 4% annualized last year. Looks like we're running more like 1% in the first quarter. So that's a big slowdown already. Then you think about the government job loss that's going to happen in the coming months. That's going to feed into not just a higher unemployment rate, but when people see the unemployment rate moving higher, even if you're not a government worker, you start thinking, is this a weakening economy? Should I pull back further on spending? So I think we will see this slowdown continue.
I was going to say, you've seen some of the credit card spending hold up, except basically for Washington, D.C. If we are in a scenario where Washington, D.C. and the surrounding areas are particularly hard hit, can the rest of the U.S. survive that?
I mean, if it's a very regional shock, then that's less concerning for the overall economy. I think the problem is, even if you have government layoffs, it's not just in D.C., it's in the surrounding area, to your point. It's private sector contractors also. And so that starts to become more dispersed throughout the economy. Again, people see that, they pull back on their spending. Other firms pull back on their hiring. That's how you generate a downward cycle.
When it comes to inflation and what might happen with increase of prices as tariffs, there was a really interesting story from the FT saying that much like Walmart, Costco has also gone to its suppliers in China and said, you need to help us with these prices. You need to help us with coming tariffs. Do these moves from corporates help alleviate some of the price increases that we might get?
Yeah, I think so, and I think that's related to this softer consumer story. If you can't push up your prices to reflect the increased costs of tariffs, then they're going to be absorbed either by the supplier, by the retailer. So it's not that we won't see any price impact from tariffs, but some of that's going to be absorbed by the firms.
Andrew, so wonderful to see you. Always a pleasure to have you on Fed Day. Good luck for it. I know you're going to hunker down like the rest of us. Citi's Andrew Hollenhorst, thank you so much. Okay, coming up elsewhere, banks keeping their lids tight on costs. We're going to have more on that story for you next. This is your Bloomberg Brief. it's your Bloomberg Brief. I'm Danny Berger in New York. Let's head over to Wall Street, where Bloomberg has learned that Morgan Stanley is planning to cut around 2,000 employees later this month in the first major reduction under CEO Ted Pick. Let's bring in Bloomberg's Charlie Wells on this. Charlie, what sort of restructuring are we seeing at Morgan Stanley?
Danny, so we're seeing these cuts happening across the board, and this is coming at a time when Morgan Stanley is really trying to keep a lid on costs. And one of the issues they've really had at Morgan Stanley, but that we've also seen across Wall Street, is this issue of attrition. It's the fact that a lot of these major banks, a lot of these major professional services firms just aren't seeing staff leave in the ways that they naturally would. And this speaks to a sort of cooling that we're seeing across that white-collar labor market. And we're seeing these cuts at Morgan Stanley, according to people familiar with the matter, happen across the board. Some of this is going to be based on performance. Some of this is going to be based on Morgan Stanley trying to kind of relocate people, kind of shift people where they want them around the world. And some of this also has to do with AI.
Well, it's not just Morgan Stanley. It's Citi, too, not necessarily cutting employees, but taking back or at least reducing some bonuses that it has on this 3-year transformation progress. How much of this, Charlie, is a wider banking issue versus just Morgan Stanley and Citi specific?
Yeah, Danny, a lot of these headlines that we're getting this morning are kind of negative on the banking sector. I think when you look at those Citi bonuses, that was a special bonus program tied to progress that top executives were making on risk and regulatory transformation. And it was a 3-year program. This was the 3rd tranche of that 3-year program. And actually, the payouts tied to performance were not great here. They came in at about 70% of target. The year before, it was about 80% of target. And the year prior to that, it was 95%. But when you dig into some of these numbers even deeper, the story gets worse. So this 3rd tranche, some of those payouts were tied to Citi's equity performance. But when you cut that out, you get that 53% tied to performance on these regulatory issues. And I've just got to say, Citi's back office has been under a lot of pressure over the years. They've been fined. They were fined back in July on some data quality management issues over $130 million. And so keeping up these regulatory and compliance issues is crucial for this bank as it undergoes a transformation. But this, in a proxy filing, is the bank basically saying they've not made enough progress fast enough.
Charlie, really appreciate that update. That is Bloomberg's Charlie Wells on Citi and Morgan Stanley and wider banking. Now, another stock that we are watching in the pre-market, NVIDIA shares are higher, 1.1%, but they have been under pressure as of late. Citi and the rest of tech falling yesterday by some staggering amounts. They have lost a lot this year. Now, it's higher pre-market, but that's after CEO Jensen Huang used his annual developer conference to try and drum up optimism and get some good news. But investors doubt that the company can keep up its blistering pace of growth.
Time for autonomous vehicles has arrived. And we're looking forward to building with GM AI in all 3 areas. AI for manufacturing, so they can revolutionize the way they manufacture. AI for enterprise, so they can revolutionize the way they work, design cars and simulate cars. And then also AI for in the car.
For more, we're joined by Bloomberg's executive editor for Global Tech, Peter Elstrom. Peter, this was supposed to be the AI Super Bowl, maybe the thing that comes and saves tech, but it still had a really rough run yesterday. Was this a story of disappointment?
Well, NVIDIA has a lot to prove here. As you've mentioned earlier, the stock has been on quite a tear over the past few years. But this year, it's under a bit of pressure because there are questions about how much companies are going to spend on AI in particular, whether they're going to be able to get the payoff at the end of that. So really, Jensen Huang is using this developers conference as an opportunity to talk about new products, but also new ways that companies are actually applying those products to the real world. So he alluded to this partnership with GM where they're trying to put AI into cars, into the design of cars, into the manufacturing of cars, and into the cars themselves. That's just part of what he talked about. He also talked about new chips that are coming out. The Blackwell Ultra is supposed to be another boost in terms of the AI capabilities for these chips. There's an operating system that they plan on using in some of these factories. They're also trying to put AI into PCs, and they came out with a platform for robots, too, to be able to use some of these AI applications in robots. So really, they're pressing hard to be able to show new opportunities for AI to be applied in the real world. That certainly would boost their business if they're able to deliver on those promises.
Peter, I thought this was really interesting. Jensen at one point said nearly the entire world got it wrong, that agents and reasoning are driving 100 times more AI computing power and demand than they expected 1 year ago. It's a not so subtle nod to the aftermath of DeepSeek and the thought by many that there would be less demand because of advancements and efficiencies. How far has Jensen Huang gone to convince his investors and the wider populace that demand is still there?
Yeah, we're seeing that. I mean, Jensen is making this case right now to the company. Certainly what we're seeing is the hyperscalers in the U.S. are continuing to spend very aggressively. They're boosting their CapEx spending by about 44% in the next year. They're aiming for $370 billion. So they're spending very heavily. And we've seen this in tech before, where the tech companies realize they can't wait to see whether the demand is there first. They're going to pour spending into the market. They're going to try to capitalize on it. And you know that if you get a big market share here, you're able to capitalize. We've seen that in e-commerce and search and web browsing, all sorts of things in the past. So these companies are betting that now is the time to make the investments, and they'll see the payoff in the future. DeepSeek has called into question whether you need to have big spending, though, to be able to get that kind of revenue in the future. I think the optimists see DeepSeek as a place where you can maybe spend less money but still get a payoff afterwards. The pessimists think the companies like Alphabet and Meta, Amazon that are spending so much money right now are maybe overspending on technology where you don't need to spend that much cash. So we're going to see how this plays out in the next couple of years.
So that's one part of the narrative that's been going on in tech, Peter. But the other one has just been China showing up in a big way with its technology. There was this fascinating FT story yesterday that China has delayed its approval for a BYD plant in Mexico because they're fearful that BYD technology is going to seep into the U.S. It's kind of the flip side of what the U.S. has been worried about. The U.S. has been fearful that its technology will get into China. Just how much of a moment are we in terms of this flip where China supremacy in tech is starting to come to the fore?
Well, you are seeing examples of this. We've seen some of this in the past. ByteDance, for example, I would say with its TikTok application, certainly was the world leader in terms of short video, and we've seen that play out. Now it's quite controversial in the U.S. BYD in electric vehicles also has been able to demonstrate some global leadership where its cars are much cheaper, its batteries work well, it has many design breakthroughs. And DeepSeek was another one where we've seen engineers in China really accomplish some technological breakthroughs that their counterparts in the U.S. were not able to match. They were able to do it ahead of time, partly because of some of the constraints that they've got. Lower costs, less accessibility to some of these chips from NVIDIA in particular. So DeepSeek was able to show those breakthroughs. And we'll see if there'll be more. Tencent is reporting its earnings right now. It's talking about very big ambitions in AI. Alibaba has been able to make some significant advances in AI, too. So the engineers there are certainly showing that they are globally competitive, and some of these businesses are now becoming quite competitive, too.
Peter, thank you so much. That is Bloomberg's Peter Elstrom. Now let's head over to Washington, D.C. President Putin has rejected President Trump's call for a 30-day ceasefire in Ukraine. The Russian president only agreed to limit attacks on energy infrastructure while demanding a stop to the flow of weapons and intelligence to Ukraine. Still, President Trump called the talks a win.
I think we had a great call. It lasted almost 2 hours. Talked about a lot of things, and toward getting it to peace. We didn't talk about aid, actually. We didn't talk about aid at all. We talked about a lot of things, but aid was never discussed.
For more, we're joined by Bloomberg's Tyler Kendall in Washington, D.C. So, Tyler, what was the outcome of this call?
Well, Danny, you said it there, President Trump trying to paint this as progress. It was one of the real first tangible concessions that we have seen from Russia since the war started. But to be clear, it fell way short of U.S. officials' stated goal, which was to get Russia to sign on to this 30-day ceasefire plan. Now, you mentioned at the top, we are expected to see a pause when it comes to attacks on energy infrastructure. And then according to the White House readout, the next phase in this will be negotiations for a maritime ceasefire on the Black Sea, followed by talks for a full ceasefire, and then then a permanent peace. Those talks are expected to happen in the Middle East, according to that readout, but we have not been given a timeline on when that could start. There are still, of course, some big roadblocks here. According to the Kremlin's readout of the call, Vladimir Putin made several demands of President Trump. That includes confirming the Bloomberg News headline yesterday that Putin would like to see a halt to all Western military weapon flows into the country. Remains to be seen if that's something that this White House would really get behind, considering just last week it reversed its own halt on U.S. military assistance and intelligence sharing with Ukraine in order to get them on board to this 30-day peace plan that U.S. officials have said will be so critical. We should just mention we did hear a response from Zelensky yesterday saying that this shows that Russia is not ready to commit to a ceasefire. In a post on X overnight, Zelensky said that there were drone attacks on civilian infrastructure. He is now urging the U.S. and Western allies to ramp up their sanctions on Russia to get them to the negotiating table in what he says would be a more serious way.
So we'll see what any outcomes might be of those talks in the Middle East. But closer to home, Tyler, there was a development that caught a lot of people's attention, and that was Trump dismissing Democratic FTC commissioners. Now, they've presented a legal challenge to that, but the legal precedent that says President Trump can't do something like that is the one that protects, for example, Federal Reserve officials. Is there a fear that should this be allowed, should this go ahead, that other agencies like the Fed will be under the firing line?
Well, Danny, this really is just the latest string of firings within these independent agencies, raising questions about how this administration might be trying to exert more control over federal regulators. And then, of course, what this means for that legal precedent that is typically used to shield such appointees. According to a letter obtained by Bloomberg News, the White House Office of Personnel sent these two commissioners a letter saying that their service at the FTC was, quote, inconsistent with the administration's priorities. At least one of those fired commissioners is saying that they do plan to litigate this in court, which could serve as an even bigger precedent as we see these other officials targeted at other federal regulators. It is interesting, though, just to beat on the FTC and exactly what is happening there. There's actually been a recent bipartisan movement, particularly when it comes to cracking down on big tech. For example, the current FTC commissioner, Andrew Ferguson, picking up where Lena Khan left off on some of the probes when it does come to looking into antitrust concerns within the sector. And just quickly, if we could go back to all the way back to this summer, you'll recall that part of the reason why then Senator J.D. Vance, now Vice President J.D. Vance, was chosen as Donald Trump's running mate was because of his more populist views, including some of his tough talk when it came to big tech.
Yep, something important that I think a lot of us forgot. Tyler, thank you so much. Bloomberg's Tyler Kendall in Washington. As we head to the break, just want to give you a quick look on the lira. Turkish lenders, according to sources, are said to have sold about $8 billion to support the currency. This came after one of Erdogan's closest rivals was detained. You can see where that support came in. At one point, the lira weaker by more than 10% versus the dollar. That support, about $8 billion, paired some of those losses. This is Bloomberg. Let's get you set up for your trading day. General Mills will be reporting earnings before the bell this morning. And then it's the big one. The Fed announces its rate decision at 2 p.m. Eastern. And then maybe more highly anticipated, the news conference kicks off at 2:30 p.m. Now, some stocks on the move this morning. Tesla leading Mag 7 higher after closing down more than 5% yesterday. A lot of that came from BYD unveiling their fast-charging EV. So those shares up nearly 3%. Gilead down nearly 3%. A Wall Street Journal report that the U.S. Department of Health and Human Services is considering HIV funding cuts. Rounding it out, Equity Health down a whopping 14.3%. Fourth quarter earnings missed estimates and 2026 guidance disappointed. I want to take you out in this hour with a view on the dollar this morning. It is strengthening. We're talking to Jane Foley about this. The haven status is still there, and perhaps events like what's happening in Turkey underscoring that, with political drama feeding into dollar strength. All right, that's it for your brief. Surveillance takes things from here.